So in a new research report, JMP Securities just said that they believe Bitcoin has a multiplier effect of 25x, but they didn't stop there. They also said that they expect to see $220 billion of inflows over the next 3 years coming solely from the ETFs. And they expect, because of this multiplier effect, that can send Bitcoin to over $5 trillion in market cap. So I thought, hey, today there's a new multiplier effect entering the Bitcoin space. Why don't we have a look at all of them and run some maths and show you guys why $6,000 invested into Bitcoin today can make you rich? So we're going to do that by looking at JMP's new 25x multiplier effect. We're also going to look at Bank of America's 118x Bitcoin multiplier effect. And we're also going to look at the more conservative 4.5x Bitcoin multiplier effect that we do commonly talk about here on the channel. So let's begin at the very beginning of this story. So new article comes out. Spot Bitcoin ETFs could see $220 billion of inflows over the next 3 years. We're going to talk about that more in a moment, but this is the part of the article I really want to highlight for you guys. We're going to jump straight into this 25x multiplier effect. So they say, if we are directionally correct on the level of net ETF inflows reaching $220 billion, applying our estimate of the current multiplier of new capital being 25x, this alone could drive a $5.5 trillion Bitcoin market cap increase, or $280,000 per Bitcoin, the authors wrote. Okay, so this new multiplier effect comes from a company called JMP Securities. Now, this gets confusing because this is not JP Morgan, but as you can see in the exact same article, you can see here, separately, Wall Street giant JP Morgan estimated $62 billion of Bitcoin ETF inflows in the next 2 to 3 years. So some people might be thinking, hang on a minute, that's a little bit confusing. We have a JMP Securities company making this bullish estimation about the Bitcoin multiplier effect. In the same article, they reference JP Morgan saying they expect to see $62 billion of capital flowing into Bitcoin. Is there a relation here? Maybe. Have a look at this. So I did some digging. You guys know I always like to show the receipts, do the digging, and try to bring a unique spin on stories. We don't just read headlines here on this YouTube channel, but you can see here. So I Googled who owns JMP Securities. Okay, well, I found out that Citizens Financial Group owns JMP Securities. Okay, so this is very interesting. And this company, it was a company actually in Papua New Guinea. Okay, again, that is nowhere near America. That is where originally JMP Securities was founded. But they were recently bought out in November 2021. By who, you might ask? Well, let's have a look. So it was actually Citizens Financial Group. And who is Citizens Financial Group? Well, they actually have a relationship, so to say, to JP Morgan in one way, shape, or form, because you can see here, Citizens Financial hires 2 JP Morgan executives to lead the private bank. Now, this is very recently that Citizens Financial hired 2 JP Morgan executives in February 2024. And this research paper came out the very next month. Okay, so again, that's interesting, but that's not what we're talking about today. We're talking about the new Bitcoin multiplier effects. So JMP Securities has entered the ring with this 25x multiplier effect. But let's have a look at the other ones. So we promise you, we're going to look at the 4 different multiplier effects today. The next one I want to look at is, of course, the Bank of America multiplier effect. Now, this one has got a lot of press over the past few years. I've publicly voiced why I disagree with it. We're going to get to that in a second. But let's first break it down. So where did it come from? Well, it came from this research paper that actually came from Bank of America back in 2021. And it was titled, "Have $93 million? You may be able to boost Bitcoin's price by 1%. So this was a little bit of research, quote unquote, done by Bank of America. Okay, so again, you can see the title here. So let's dig a little bit deeper and let's jump straight into the maths, because this is the maths that everybody cites. But as you're about to see, there's a little bit more to this story. Okay, so the maths said here, the analysis found that it would take $2 billion of inflows to move the price of gold by a single percentage point. Okay, so in this report, they're looking at how much inflows is it going to need to actually move the gold market cap by 1%, the Bitcoin price by 1%, and US treasuries by 1%. So Bank of America was trying to say, okay, if Bitcoin is this new global reserve asset, this new global form of money, this new digital gold, is it actually usable as money or is it too volatile? Okay, so they found that it was actually going to take $2 billion to move gold by 1%. And they also found that it was going to take $2.25 billion to move the US Treasury market by 1%. But they also said, we estimate a net new inflow into Bitcoin of only 93 million would result in the price pumping by 1%. So what has created the enormous upside pressure on Bitcoin prices in recent years, and particularly in 2020? Bank of America says the simple answer is modest capital inflows. Okay, so they actually used this report to try to say, hang on a minute, Bitcoin is too slow, too dirty, and too volatile to be used as money. That was their exact words. So let's have a look a little bit deeper at what else Bank of America said in this report, okay? Because they said a lot of things, as most Bitcoin critics do. They did say a lot, and they didn't just stop there. I'm just going to try to find you guys the quote, but they were also bashing Bitcoin's green energy usage. So they were saying, well, actually, Bitcoin is not green. Judging by all of the research we've done, Bitcoin is not green at all. And Bitcoin is too volatile to be used as money, too impractical to be used as money. And they just simply bash Bitcoin in this report, okay, which is very interesting, very, I think this is what gets missed because a lot of people think, okay, Bank of America is bullish on Bitcoin because of this, multiplier effect study that they did in 2021. But there's a couple of reasons I don't like this study. One of those being that Bank of America only looked at a very narrow window of time in Bitcoin's life. And you can also see, I managed to find the article that somehow disappeared on my laptop that I was going to show you guys. So I'm sorry if I was a little bit distracted there. But this is also from the same research paper. Bitcoin is too volatile, impractical, and fails as a store of value. Bank of America. So this is their 2021 research paper. They're not being bullish on Bitcoin. Okay. Yes, if you run the numbers and you say, okay, it takes $93 million to move Bitcoin's price by 1%, that is 118x multiplier. Everybody talks about it. But I don't think this is accurate because Bank of America only looked at Bitcoin price action within a very narrow window of time. They looked at a couple of hour window in a very bullish afternoon where the price of Bitcoin pumped by like 8%. And they said, oh, look, Bitcoin is way too volatile. I believe the exact day they looked at was actually when Tesla announced that they were buying Bitcoin. If I were to show you on a chart what exactly that actually looked like, you can see pretty clearly that the Bitcoin price was very, 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 volatile on that day, okay? Naturally, that makes sense. What's going to happen when the world's richest man announces that he's buying Bitcoin? Okay, of course, everybody's going to buy Bitcoin. There's not going to be many sellers selling Bitcoin if the world's richest man decides, hey, you know what? I'm going to actually put Bitcoin on the balance sheet. That is exactly what Elon Musk said way back here in early 2021. And this is the data, the comprehensive data that Bank of America looked at to determine Bitcoin is too slow, impractical, and too volatile to be used as money. So let's go back in time. This here is the 2021 Bitcoin bull market. Now, the window of time that Bank of America was looking at was right here, okay? I believe they were actually saying they ran their little research report on this day here, I believe. So as you can see, the price of Bitcoin pumped by about 10% in a day. We nearly had a God candle. And this is when Bank of America said, hey, look, Bitcoin is way too volatile to be used as money. US treasuries and gold are far better stores of value than Bitcoin. Okay, so again, I don't trust this 118x multiplier effect. I'm going to actually show you the two multiplier effects that I trust a lot more, and the same ones that I've been referencing since 2021. We're going to get to all of that in a moment. I want to play a little video about Samson Mow though, because I've been talking about the multiplier effect since 2021, and most people thought I was crazy. I might have actually been the first person to ever call it the multiplier effect. I found it over here on Willy Woo's website. And at the time, as you can see, it was called Bitcoin market cap gain per dollar invested. Little bit of a mouthful. That's why I decided to call it the multiplier effect. But now you can see it's kind of going a little bit mainstream. So everybody's talking about the multiplier effect, and I believe everybody is correctly using the multiplier effect. Now I want to play a quick video over on the this is a Twitter video of Samson Mow talking about the multiplier effect. So we're going to do that, and then I'm going to answer some questions because I can see a few interesting questions in the live chat that I also want to cover. So let's listen to Samson Mow talk about the multiplier effect.
How could we see the impact of this approach?
Right, because Bitcoin supply is finite and decreasing over time, I think there is a multiplier effect, but people don't really understand that yet. I've only seen a few people on Bitcoin Twitter commenting about this multiplier effect, but it is a very powerful effect because you have a very illiquid supply. We talk often about a supply crunch or supply shock, and that's because there's not much Bitcoin available to buy. Between thousands of exchanges around the world, maybe there's 1 million, 2 million Bitcoin available for purchase. There's probably $10, $20 billion of capital that's going to flood in right away. That's going to go into this small supply of available Bitcoin, maybe 1 to 2 million BTC. So that is really what drives that multiplier effect, because it's not that you're going to buy $1 of Bitcoin and the market cap goes up $1. Because of that limited supply and because of that rapid injection of capital, you have a multiplier effect. And that multiplier effect, I've seen numbers thrown out there somewhere between 2 to 3 times, 10, 50, 100. And if you factor in the multiplier, the Bitcoin multiplier, then Bitcoin can jump to $1 million very quickly in a matter of weeks.
Okay, so Samson Mow kind of explained what the multiplier effect is, okay? So I'm going to actually break it down for anyone who might not know what the multiplier effect is. Samson kind of alluded to it. There's only 1 to 2, maybe 3 million Bitcoin that actually circulate around and are available on exchanges for sale, okay? So the fact that there is a limited amount of Bitcoin, it kind of gives you a multiplier effect. So the reason that, a $1 of new incoming capital pushes the Bitcoin market cap up by 4.5x today is because of the fact that not all 21 million Bitcoin are available for sale. To illustrate that a little bit deeper, I want to show you guys tweet thread I wrote on this topic might have been 2022, because it's kind of going to explain what the Bitcoin multiplier effect is in a little bit more detail. So I think the multiplier effect is the most important concept to understanding Bitcoin. So it's my pinned tweet. So I wrote a thread and I said, when most people calculate how much capital needs to flow into Bitcoin to push it to $1 million, they assume we need $21 trillion of capital inflows. And I say, this is wrong because it ignores the Bitcoin multiplier effect. Time for a thread. So you can see here pretty clearly, most Bitcoin maths calculations assume that all the 21 million Bitcoin are available for sale. This is wrong because 78% of the supply hasn't moved in the past 1 year. And this amount is actually growing by the day. So you could also see here, HODL waves shows us something similar. HODL wave shows us that the amount of available Bitcoin for sale is only decreasing, okay? So not all the 21 million Bitcoin are available for sale. This is why we actually have a multiplier effect, okay? So after institutional investors hoard Bitcoin, just 22% of Bitcoin is left for retail traders, okay? So this here is why we have the multiplier effect. Now, back here in this 2023 thread, I was referencing Willy Woo's website. Now, I believe this is the best representation of what the multiplier effect is. And it's actually changed a lot since I wrote this tweet thread, and it's changed even more since I wrote this article making the case for why Bitcoin is going to see a super cycle. So as you can see, this here is Willy Woo's model. Okay, we're going to go over to his website in a minute and have a look at his exact model. But you can see Willy Woo and Dylan Leclerc both have models showing that for every $1 that enters the space, it has a 2.5 times to 3x multiplier effect on Bitcoin's market cap. This is because most of the Bitcoin supply isn't actually available for sale, highlighted by our look at on-chain metrics earlier. Okay, so again, this is like an 8,000 word article that I wrote in 2021, making the case for why we will see a super cycle. And I compared Bitcoin to all of these technological adoption curves that we do see in the space. And at the time, it was actually a little bit uncommon for people to be comparing Bitcoin to, the adoption curves of all of these technologies. Diminishing returns was like the conventional narrative. And I said, okay, is this bull run Bitcoin's final cycle? You can see this was published in November 2021. It was the first article I ever wrote in Bitcoin Mag. So there you go, a little bit of a flashback. But in this article, way back in 2021, it was clear that there was a multiplier effect in Bitcoin, okay? And at the time, I had about 1.5 years worth of data to point to where I said, look, the amount of Bitcoin sitting on exchanges has been declining for 1.5 years. Is this a macro downtrend? And I said, again, I tell you guys, I've been saying the same things for 4 years, honestly. You can see here, this is in 2021. For the first time in Bitcoin's life, more and more supply is flying off of the exchanges. This is a fundamental shift which began in March of 2020 that appears to be a great inflection point. So again, in this article, I'm comparing Bitcoin to it being a technology. Technologies go exponential after they reach an inflection point. Now, again, that's not the thesis for today's video. We're talking about the multiplier effect. But the reason the multiplier effect has only grown since 2020 is because of this fundamental shift that we're seeing. Okay, so there's a little bit of background. Now let's actually run some numbers and have a look at this chart. So I want you guys to let me know, is this chart better visible when it's black or white? Okay, so we have a white version of the chart. I don't know why the line just disappeared on me. I'm going to put it back to black so we can actually double click on the legend. Well, now I've lost. Okay, now we can see everything. Now we can see the Bitcoin price, but now we can't see. Okay, here's the multiplier effect. Sorry, guys, I lost that there for a minute. So here's the white version. Let me know in the chat what is a better visualization. Okay, so we have a new question before we jump into the maths of the multiplier effect. I want to answer a question, someone who might have joined late. JMP or JP Morgan? Okay, so rewind to the beginning of the video. I explained the differences between JMP and JP Morgan. It's interesting that both separate institutions were referenced in the same paper that was talking about that 25x multiplier effect. So I did answer that earlier if you want to have a look at that. But let's run some maths and let's have a look at what's going on with this Bitcoin multiplier effect. You can see today it is at 4.5x. Now, something that's very interesting about this multiplier effect, and the reason why I continue to use it in all of the stuff that I write on Bitcoin, I was going to call it analysis, but it's not really analysis. Let's be honest. I'm just a 27-year-old bogan talking about Bitcoin on the internet. I know in all of the articles that I write about Bitcoin, I always reference this because it's looking at on-chain data. So this pink line is actually called the price gain per dollar invested, and it's a 2-year moving average of Bitcoin. Now, what's fascinating about this line is before 2020, it never got above 3.7. After 2020, and after we've seen a supply suffocation in the amount of coins on exchanges, this multiplier effect has jumped up to 4.7 twice. So the highest level it's ever been. So in this 2020, 2021 bull market, you can see just before Bitcoin entered the really parabolic stages of the bull market, this multiplier effect peaked out at about 4.8. Okay, so this is natural because when Bitcoin reaches peaks, what you see is the long-term holders and the smart money. begin to actually slowly sell off some of their Bitcoin. Naturally, this is what we see every bull market. The whales always kind of sell the top and they buy Bitcoin at the bottom. So when the whales are buying Bitcoin at the bottom of the markets and in the early stages of the bull market, the multiplier effect slowly rises because the smart money and the whales are sucking Bitcoin off the market. And the halving has a similar effect. There's less Bitcoin being put on the market when the miner's revenue is cut in half. But naturally, the multiplier effect will peak kind of at the top of the Bitcoin markets as the whales begin to actually sell Bitcoin and add supply back onto the market. Okay, so this is what this chart is showing you, and this is why the multiplier effect peaked in 2021. And right now, we don't know if we're going to set a new all-time high in the Bitcoin multiplier effect, but it's at 4.7, okay? So for easy, simplified mathematical purposes, I assume that this number was at about 4.5x, okay? Now, we're going to look at one more multiplier effect in a moment, and it's going to be the last multiplier effect we look at. It's going to be the another way that you can actually measure the multiplier effect. But I do want to take a look at the live chat and some more numbers and some more maths, because I've ran some interesting maths. Now, I tried to send the tweet earlier, but it actually didn't work. So I'm going to show you the maths, and I'm going to show you why $7,000 invested into Bitcoin can make you rich. So I tried to send the tweet, but the tweet failed. And luckily, I back up all of my tweets in my messages. So as you can see, I'm so lonely on Bitcoin Twitter that I message myself. So this here is a message to myself. And you can see that I ran some maths. I'm going to actually publish this tweet later today. So you can, if you're not following me on Twitter, you can follow me on Twitter and you'll be able to see the full long form tweet that I tweet here. But you can see, let's assume that $100 trillion of capital wants to actually flow into the Bitcoin space. Now, again, I think this is a conservative estimate for Bitcoin's kind of end game, so to say, because when you actually have a look at all of the money in the world, there's $900 trillion of wealth in the world. Again, we look at this chart a lot. For anyone who's new, might be stumbling across this video. As you can see, there's $900 trillion of wealth. There's $28 trillion on central bank balance sheets. You know, the billionaires control about $12 trillion of wealth. You know, there's $12 trillion of gold in the world. Things get really crazy when we start looking at the global money supply. You know, $50 trillion worth of wealth. It's actually probably best to zoom out a little bit on this website. Global money supply, 82 trillion, $90 trillion in the stock markets, $300 trillion in global debt. And then the big one, global real estate, $327 trillion, okay? So I'm assuming that Bitcoin is only going to capture $100 trillion of all of this $900 trillion. So again, I feel like that's pretty conservative, but you can run your own maths. But in this maths calculation, I looked at all these different multiplier effects that we've covered in today's video. The 4.5x on-chain multiplier effect. I've also looked at the 118x Bitcoin multiplier effect. And I've also looked at the new 25x multiplier effect that came out of that research report from JMP Securities. And again, I've assumed that we see $100 trillion of inflows coming into Bitcoin. And let's start with the most conservative estimation. If you have a 4.5x multiplier effect, you times that by your $100 trillion of inflows, and that means you've got a $450 trillion market cap. Then you can divide that market cap by the 21 million Bitcoin because we've assumed a multiplier effect is present, and that gives you a price tag of $21 million per Bitcoin. Okay, so again, how does $6,500 make you rich? Well, if you own $6,500, that's 0.1 Bitcoin or 10% of a Bitcoin. And if we assume the most conservative multiplier effect with $100 trillion in new capital flowing into Bitcoin, that means your 0.1 Bitcoin or $6,500 investment into Bitcoin today is worth $2.1 million in this hypothetical Bitcoin endgame. Okay, but that's the most conservative estimate. Things get even more bullish when we look at the more bullish multiplier effects. So again, you do the same math to the 25x multiplier effect, and it takes you to a $2.5 quadrillion market cap, and that gives you a price tag of $119 million per Bitcoin. And things get even more wild if you assume the Bank of America multiplier effect of 118x. We got $100 trillion of inflows. That takes you to an $11 quadrillion market cap, which is a bananas number to think about. Pretty soon, we may be thinking about quadrillions pretty routinely if the central banks keep printing money like they are printing today. And if America keeps adding $1 trillion of debt every 100 days, that's another video and another topic we're going to talk about later today. But as you can see, an $11 quadrillion Bitcoin market cap, if we assume that 118x Bitcoin multiplier effect is true, and that takes you to a $561 million price tag per Bitcoin. Okay, that's just outrageous. It's incredibly outrageous, but that's the maths, okay, of those three multiplier effects. Now, what's the other multiplier effect that we haven't actually referenced yet? Well, in this 2021 article that I wrote, it's a behemoth of an article. You can show that I linked to a Willy Woo multiplier effect. I also linked to a reply that Dylan Leclerc sent me on a tweet back in 2021. So he kind of shows that I asked, what is the multiplier effect? Dylan says it's essentially the MVRV, market value to realized value ratio. So he says, if you assume every time a coin moves to the economic sell, it's not thus, it's somewhat imperfect. But if you take a 2-year moving average of MVRV, it's around 2.5. So $2.5 in market cap for every $1 invested into Bitcoin. So again, this was an old paper, okay? This is an old conversation. This is way back from 2021. Let's have a look at what the MVRV is today, okay? So this is the updated MVRV Z-score. And you can see it kind of, again, it looks very similar to the multiplier effect because it kind of peaks in bull markets. And then once long-term holders begin dumping their coins, this ratio lowers and sells off a little bit. So today, this ratio is around 3x, okay? So that's kind of another look and another estimation at what the Bitcoin multiplier effect actually is, okay? So that is the fourth multiplier effect we're going to look at today. Before we round today's video out, I have one more thing to look at. Before we get there, I want to actually look at the chat because it looks lively today. There is 114 of you guys watching. Wow, thank you. I didn't know there was so many of you guys in. What is it, a Saturday? Is it? No, it's a Sunday today. It is a Sunday, so welcome. If you're new here, again, feel free to subscribe. We go live 2 times a week over here on the Bitcoin News YouTube channel, plus a video and an interview that we push out. So if you want to be notified whenever those drop, subscribe. It also helps the channel out, so we appreciate that. We have an interview coming up with Fred Krueger, actually, which I think is one of the most interesting interviews I've had. We challenged him about the the Bitcoin power law model, and it was a pretty fascinating conversation. So stay tuned for that. Liath is in the chat. Johnny's in the chat. Dan Lass is going to come find me when Bitcoin's at $1 million per coin. It'll probably be Argentina. We're going to get a nice steak dinner together. So you can probably find me in Argentina when Bitcoin's at $1 million per coin, or El Salvador. Okay, so Dan M is talking about the fact that there are lost wallets. So there's about 4 to 5 million coins in lost wallets, and this also contributes to the Bitcoin multiplier effect. The reason that not all 21 million Bitcoin are available for sale is why we have this multiplier effect. New Bitcoin adopters are born every day. This is a great point from All Night Hider. So we have a diminishing amount of supply for sale. But at the same time, we're watching a diminishing amount of supply for sale. We're watching an exponentially growing amount of demand for Bitcoin. Okay, we're at 0.5% true global adoption of Bitcoin today. We know Bitcoin's a technology. Most people would have to agree adoption levels are going to increase in the future. I think they're going to increase exponentially. So what is the multiplier effect going to be in 5 years' time? I think it's going to be a lot higher, a lot higher. We have Bill in the chat. Bill, thank you so much for your continued support. He sent me the biggest super chat ever on my personal channel the other day. So shout out to Bill. Thank you for everything you do. Thank you for tuning in. Den Lass, I'm never going to sell my Bitcoin, so mine will not hit the market. Attaboy. I am not selling. Probably 80 to 90% of my Bitcoin is going to be given to my future kids. I don't even have kids yet. So me too, Dan. There's not going to be a whole lot of Bitcoin hitting the market from me. Dan M likes the conservative 4.5x multiplier effect. McLovin, who is actually the first member of my personal YouTube channel. So shout out to me. I think he might have been the second. So shout out to McLovin. Luke, what multiplier effect is actually occurring today based on known metrics? So I actually think today, right now, today in the market, it's probably around 10. Okay. Now, why do I say that? Well, that is because if we go back to the conservative Willy Woo market cap gain per dollar invested, you can see how rapidly this has risen from 1.3 to 4.6. Okay, look at how quickly this has increased since the bottom in Bitcoin in 2022. Okay, so again, I'd like to remind you, this is a 2-year moving average of the data. So for it to rise from 1.3 to 4.5, for the moving average to rise from 1.3 to 4.5, that means the actual real multiplier effect over those past 2 years has to be higher than 4.5. Again, let me know in the chat if that makes any sense. But if I had to guess, I think it's somewhere around 10. So the multiplier effect for Bitcoin today is probably somewhere around 10. I don't think it's as bullish as Bank of America believes, and it's 118x. That's what I believe it is today. Bill makes another great point. More people are going to learn about Bitcoin in the next 15 months than they have in the last 15 years. 100% agree with you, Bill. Think about the marketing campaign that BlackRock, Fidelity, and all of these very large asset managers are only just beginning to engage in with Bitcoin. Okay, the ETFs have only just launched. Okay, so I think that the bullishness has only just begun. Okay, so I really do think that things are only going to get even more bullish. This is interesting. We got a comment. Somebody says the Monero multiplier is 6.5. If you're referring to Monero, I would love to hear more about that and how you determine the Monero multiplier was 6.5. Future Boys, greetings to you, Future Boy. He's in the chat again. He's nearly made every live stream. And Ravender asked a question, what is Iran's effect on Bitcoin? Well, in the short term, Bitcoin crashed, okay? So in the short term, Bitcoin crashed yesterday on the news of Iran and the whole Israel war escalation. I think in the medium term, everything is good for Bitcoin. Michael Saylor even tweeted this out yesterday. I'm going to do what I do best, and that is bring up tweets live on air while I'm multitasking. So Michael Saylor said something along the lines of chaos is good for Bitcoin. And he said this yesterday just as the escalation happened. And I want to make sure I'm quoting him correctly. So I want to find the tweet. So here's Michael Saylor's Twitter account. Yesterday, he said, chaos is good for Bitcoin. So again, this is a little bit of a tongue-in-cheek comment. And again, I'd like to make it very clear. War is not good. War is a horrible thing. I think it's disgusting that we're still engaged in war. But I think in regards to Bitcoin, Bitcoin is a flight to quality. Bitcoin is a safe haven asset. When the war first kicked off with Israel and Palestine last year, I think it might have been October 2023, Bitcoin actually pumped aggressively. It pumped by like 30% in the matter of 4 weeks when it first started. So again, in the medium term, I think it's good for Bitcoin. And a similar thing happened in March of 2023. Bitcoin rallied by 55% in 5 weeks during the March 2023 banking crisis. So I think in the medium term, this is good for Bitcoin. McLovin says 10 seems accurate, 4.5 seems low, 118 seems rather high. I think I agree with you, McLovin. Great points. Now, I think it's interesting that there was this mention of JP Morgan in the original article that we covered. So again, in this article that was talking about JMP Securities and their new 25x multiplier effect, which is a separate institution to JP Morgan, They mentioned JP Morgan in the same article. Separately, Wall Street giant JP Morgan estimated $62 billion of Bitcoin ETF inflows over the next 2 to 3 years. So Jamie Dimon hates Bitcoin, but why are they estimating that there's going to be $60 billion of capital flowing into Bitcoin over the next few years? You can see it very clearly. Jamie Dimon doesn't have the best track record predicting Bitcoin, or let's maybe assume he was fudding Bitcoin. We could see in 2013, Bitcoin's a terrible store of value. 2015, Bitcoin will not survive. 2016, Bitcoin is a scam. 2018, I don't really give a poo to Bitcoin. In 2018, 2020, Bitcoin is not my cup of tea. 2023, Bitcoin is fool's gold. Bitcoin is worthless. So as you can see, Jamie Dimon has hated on Bitcoin for a pretty long time, which is pretty interesting. Why is he saying bullish things about Bitcoin? Is he backflipping on Bitcoin? Honestly, who knows? Who knows what Wall Street is saying about Bitcoin? Who knows what Wall Street is even thinking about Bitcoin? Okay. But if you want to learn a little bit more about the multiplier effect, I'm going to send you to 2 videos. Okay. Because we've talked about it recently in 2 separate videos. One being our interview with Preston Pish, where we titled that video, "When Will the Bitcoin Power Law Model Break?" You guys seem interested by the power law, so we also reached out to Fred Krueger. So stay tuned for that interview. Another interview we talked about this, power law breaking and the multiplier effect was this interview with Samson Mow. So Bitcoin's rally to $1 million just started. So if you want to watch either of those interviews with actual experts, not just me talking gibberish on live streams for 40 minutes, you can check those out. Samson and Preston are some of the greatest minds in the space. So I'd highly encourage you to check that video out. If you want to learn a little bit more about the war on Israel and the escalation that happened yesterday, I did a live stream on my personal YouTube channel, so you can check that out as well. I think the synopsis of that entire live stream I did yesterday on my personal channel is summarized here by Bill. So Bill says, stocks fund the wars, defund the wars, buy Bitcoin. Okay. I think that's a beautiful note to end today's live stream on. So thank you for that comment, Bill. Thank you for everyone who tuned in. This is a super lively chat. I think it's the most people we've had in a YouTube live stream ever on the Bitcoin News YouTube channel. So thank you for tuning in. If you enjoyed it, slap a like on the video. If you joined late, rewind back to the beginning of the video. You can put it on 2x speed and you can see the 4 different multiplier effects that we covered today and the maths that we ran today. Okay, so with all that said, guys, hope you enjoyed today's video. I will see you guys in another live stream early this week. Enjoy the rest of your weekend.